That is crazy
Yeah,
to me.
that is.
I could say that I have not seen a negative stat in solds in those areas in a long time.
There are a lot of other homes in this price range listed right now, and they are sitting, right? So we have to be nice and tight. And what that means is we may have to do some painting. We may have to do some things that you're not typically used to doing, pressure wash. And I say, if I need to do those things, I will.
Well, welcome to the Beyond Wealth podcast. Deveron Smith, thanks for coming in, man.
Man, I appreciate you for having me, man. I'm excited to be here, and let's talk some real estate.
Yeah. It's always good. So I've networked with several Keller Williams agents. Always impressed with you guys. You just have a great culture.
For sure.
Always fun to hang out with. And we actually met at one of
Matthew
Gregory's.
Yeah.
He just opened up this like Airbnb
That was
type
awesome.
thing.
Yeah.
And we met, and Bella, and you guys were just like so fun. And I was like, as soon as I met y'all, I was like, y'all got to come on the podcast.
For sure.
We got to talk real estate because it was just fun.
Yeah, it was a great time. It was exciting. We got to talk about a lot of different things that were going on in the market at the time, and just great conversation, man.
Yeah.
And I love that,
Yeah. Well, it's interesting even walking in here, we were talking about just kind of where the market's at. The numbers, I think, are going to reflect some of what we're feeling in situations specifically. But I just appreciate you bringing your knowledge today.
Of course, man.
We'll jump right into it.
Let's do it.
All right. So we always, talk about the Birmingham market update. And this one is going to be for the month of, February. So, January was a little slow. And I typically don't say like, this is a trend until I see it 2-3 months. So this will be another indicator of like if we're still in that pocket. I know that there's a lot of economic things happening that, with any presidency shifting, there's some different policies, and those times take time to flush out.
They do.
Whether you believe in them or not. Like,
doesn't matter who you voted for, who you chose. I mean, we know some changes were going to happen. And you just got to go with the flow, know?
Okay, so the market as a whole we'll look at, and then we'll look at specific submarkets. But right now, from listings of 2024, we had 12,074, and in 2025, we're at 12,861. So that's a 6.52 increase. And I want to go back to January's numbers, which was up 14% on listings.
Mm-hmm.
So that's pretty crazy. And talk about a little bit, you were saying that you've had a lot of listings. You're kind of listing heavy right now, and there's not as much movement as you would like. So
what I'm seeing right now in the market as far as listings, they're not moving, right? It's pretty slow, and I think the biggest reason right now, a lot of uncertainty with buyers. Interest rates, like you said, we talked about the president thing that does play a factor. But the biggest thing is we have more inventory simply because there are not as many buyers out in the buyer pool, right? And it's I say essentially double from last year. It's way more listings right now than we had last year, simply because there's not as many buyers out buying right now.
Yeah, and it's interesting because there is still, I think, some pent up, buyers from the previous market where it was just like, during COVID and when the rates were super low, it was like you were fighting.
You were fighting, 100%.
But I don't think there's as many buyers willing to sign up for the current interest rates,
knowing what they currently have.
Yeah.
And the problem is a lot of the people that are willing to buy, especially when you get to a certain price point, they have to sell.
Yeah.
And right now, homes are sitting.
Yeah.
Right. And these sellers are being impatient. They're like, hey, I want to move, right? I definitely want to move. It was a stretch for them to even think about moving, right?
Yeah.
Now their house is taking a long time to sell. In their words, taking a long time to sell because what they know is in 14 days, my house should be sold, right? And we're moving more to a normalized market, right? Back in the day, before I got in real estate, it took 3 months to sell a house, right? But we've been pacified and baby, and it only took about
we thought real estate was
yeah, we thought real estate was easy, and it takes 7 to 10 days or 14 days, and that's just not the case now.
And I think you have to have a really good agent like yourself or me who can really prep a property
100%
and do it well. So an example of that is, I actually have an investment property that I personally own. Mm-hmm. And put it on market, but I know how to prep a property. I do it really well. I staged it. None of the other properties in the area were staged. I just try to be above. I want to try to
100%.
be different than everyone else.
You did your homework.
And I did get an offer the first weekend, which was really good. Had a good amount of showings, and then had an offer. The offer, though, was not as strong as I would like. But it did indicate to me that like I was on the right pathway.
Right.
And so I was like, man, first weekend I'm going to hold off. Well, since then I've had probably 25 showings.
Right.
And I didn't have an offer. And so I went back to that initial offer and I said, hey, we're good. And we're moving forward, hopefully signing later this afternoon.
Man, that's awesome.
So I'm excited, but I just had to assess, like, this is what the market's telling me. Maybe in 3 months, 4 months, if the rates tick down, which they're talking about the 10-year note inversely being affected for housing market will be positive.
Right.
Maybe in 3 months, I would have got a full
price offer. Yeah.
But right now, I'm trying to sell it.
100%.
I'm not trying to sell in 3 months.
Exactly. You had to take a chance on that, and you went back to it. I mean, initially, obviously, it was the first weekend. You didn't want to take a chance on that. You was like, hey, let's just see what we get and see how things go. But the best part about that, you were able to get them to come back around.
Right.
Typically, that doesn't happen.
You're right. When, I was very surprised, but I was like, hey, it's worth a conversation.
100%.
And it worked for them. So I'm excited. So hopefully that'll close on the
especially during these times, man. Like I said, I have a listing in Trustful right now. First day on the market. Super excited, and I did my homework in the neighborhood. I knew, the average days on market in that particular neighborhood. Right. I knew the average days on market in Trustful. So I kind of set the expectations for the seller. But when we got an offer within the first day, which I told them, I said, hey, there are a lot of other homes in this price range listed right now, and they are sitting, right? So we have to be nice and tight.
Yeah.
And what that means is we may have to do some painting. We may have to do some things that you're not typically used to doing. Pressure wash. I say, if I need to do those things, I will. Right?
Yeah. We're going to make it the best.
We're going to make it the best one in the neighborhood.
I love that.
Right? We had 2 others listed in the neighborhood. I reached out to those agents and kind of got some feedback from them. They had only had 2 or 3 showings the entire time being listed, and they were nearly at 101 days plus on market.
Yeah.
So me knowing that, I was like, hey, when people are looking at these pictures, they have to be excellent.
Yes.
So I discussed that with them, and immediately we got showings on the first week on the market. But that first day, we received the offer, full price. They did ask for some closing, which I prepped them on that as well. Yeah. Let's expect $5,000 to $7,000 in closing costs. It was around $6,000. So everything that I had already prepped them on, they were prepared for. Right. They signed. We sent it back over. The next morning, the agent calls me and said, hey, the buyer has made another decision. They're not really comfortable with the payment. The interest rate went up from the previous cold feet. So that's just kind of the times that we're in right now. Yeah. And now here we are, 29 days on market. We've had showings and, some interest, but, man, it's just moving slow right now.
It definitely is. And going to solds, we are at a negative 13.44%.
Exactly.
So that 100% says we're up on listings and we're down on solds.
Mm-hmm.
And so those numbers are really ringing true with what we're seeing. And I don't think that's necessary. What's interesting is when I talk to clients and they say, what's my house worth?
Right.
And I say, currently, your house is worth this. Right. But if you want to sell it quicker or in this current season, you're going to have to be more aggressive than what it's worth. And that's what people sometimes don't understand is seasonally the market can shift several tens of thousands of dollars, if not,
even more.
On the price
100%.
And that's what we're seeing is solds. And we'll go down to list to sales price, which is also in the negative, and we'll touch that. We'll touch base on that.
Seen a lot of price reductions.
Yeah, price reductions, and it's not horrible, but let's actually just cover that. So list to sales price is down negative 0.45%. Now, that said, let's go to the actual percentages. Okay. So list to sales price in 2024 was 98.39%. So that means that at 100%, they were 98% below that list. Now we're at just below 98. So we've dropped almost a half a point below last year's numbers, which were already 2 points below the list price. So we're 3 points below. So if you list at $100,000, make the math easy.
Right, of course. Look, I know we're real estate agents, but let's make it easy, all right?
Yeah, if you list at $100K, you should expect to sell the house for $97K.
Right,
is what that says.
100%.
And so so in theory, you're at that $500K price point. You may be like, hey, we may need to concede 10 to 15 off this price
to make it even make sense.
Yeah. So everyone wants a deal.
Everyone wants a deal right now. When you see multiple listings on the market, you want the best deal regardless.
So going to medium sales price, we are at 1.39%. So overall, there is a little bit of appreciation, but not significant.
Not significant.
Yeah, so 1%, give or take. This is going to be really helpful. So medium days on market last year was 26. We're at 35 now.
Yeah.
just another indicator. So that's actually percentage-wise is kind of deceiving. You know, we're talking about 10 extra days,
right?
Actually 9, but that's a 34%.
But in our
increase.
world, 9 days is a long time.
Yeah, it's almost 2 weeks.
Yeah, when you have, especially when you have an impatient seller that's used to seeing, hey, my neighbor's house last year sold 14 days. Hey, we're in a different time. You know?
So when I talk to clients, I typically say, like, at this, you know, I don't say list your price at this exact price. I say, here's the top of the range, here's the bottom of the range. And on the high end, you're going to probably sit 2 to 3 months. And on the low end, you probably will get a contract within 2 to a month.
Right.
Now I'm saying, like, on the low end, you're probably going to be sitting a month to 2 months.
For sure.
On the high, it's 2 to 4 months.
100%.
So I've shifted that language because that's what we're seeing.
Yeah, 100%. I mean, it goes back to setting those expectations up front.
Yeah.
And I tell clients all the time, this is not me talking from the heart. I'm talking about data, because they're like, you know, I say that to say because a lot of sellers, they love their home, right? Yeah. I bought it for this price. It's worth this. I know what it's worth.
I know I painted that
bedroom upstairs, right? I know I put some new backsplash in the kitchen. All that's great, you know, and I applaud you for that, for taking care of your home. Yeah. But when we talk from a space of stats and numbers, right? Yeah. So I try to explain that to them in the initial appointment, like, hey, this is what I'm seeing, right? And bring them into our world. Sometimes we don't do that as agents. Yeah, we advise our clients, right? But sometimes we have to literally show them.
Yeah.
Like, this is the data, and this is what we're working with, right? And when you set those expectations, when you have that conversation about a price reduction, it's a much easier conversation, right?
Yeah.
You know,
I'm curious. You're so good with people. What do you do when, like, as just a side thought, I thought about the backsplash, and you know, if someone selects a very niche backsplash that is very stylized, like maybe not current or whatever, like, but in their mind they're like, I updated it, it feels awesome, they like it, but it's not a neutral. Like, we would all agree that, like, if you put a neutral backsplash up, that's generally where you see in most houses, you've added value. But if you go super high end and weird, we'll just call it weird.
Let's just be honest. All right. Sometimes,
like, how do you navigate that conversation? Like, it's a very specific buyer that's going to like that backsplash. Let's not count that in the value.
100%. I mean, it is. I mean, but when you show them other homes that are listed on the market, and, you know, I like to do this often, like, as a buyer, I say, I'm walking in your house as a buyer. As soon as I walked through your doors to meet you today, I walked in as a buyer.
Yeah,
they're like,
that's good.
Whoa. I'm like, yes, I walked in as a buyer because I want to see that from a buyer's perspective. You know, I am the professional. I've looked at other homes in the market, so I can compare your home to this one, right? And they're like, well, show us some. Perfect. I usually have that data in front of me, showing them, hey, this is what the house is looking like. Or I pull out my iPad and say, hey, let's just take a look on the market. Or I say, hey, you and your wife tonight, look at the houses in this price range and tell me what you think. And do a comparison as if you were the buyer.
Yeah.
And usually they come back to me the next morning, okay, Devron, I completely understand. Yeah, my kitchen is updated. I do love my backsplash, but I just seen another house that's a little bit newer than mine, right? A little bit more modern, and they're a little bit lower priced than we are. And I completely understand what you're saying, right? So I kind of put the ball in their court.
That's good.
You know, I don't really, because when you start talking about people, you know, and when with their updates, and well, that may not help the house sell, you might not get the job, you know. You know, so I don't try to, you know, I don't be mean about it, but I try to show
them self-evaluate.
I let them self-evaluate. Pretty much what I do. I just I show them the homes, or if they don't want to get the data, I get the data for them and send it to them. Hey, I'll send you an email with all the homes in the area that are similar to yours, and you can take a look at them.
You know? I love that. That's great advice, man. Yeah. So let's dive into some of our sub-markets. Sure. You know, and they're not necessarily by area, but a little bit more bracketed by price point, which I think is helpful. And these are still generalizations, but let's look at Mountain Brook, Vestavia, and Homewood. So listings is up 6.48%, so pretty congruent, and which is very popular areas. Very popular areas. The solds is down 12.9%.
Back to what we were saying, man.
That is crazy to me.
That is insane.
I would beg to say I've looked back at, I could say that I have not seen a negative stat in solds in that area, in those areas, in a long time.
Yeah, for sure.
In a long time. So they too are up on listings
and down on sold.
Down on solds. Yeah. Medium sales price. So actually, let's look at. Let me see if I can pull February's or January's numbers. So This is what's really confusing, and this is why, like I said, I don't just look at 1 month. So medium sales price last month, which I do remember being significantly higher, was at 34%.
Wow.
And that's theoretical appreciation. It's kind of a gauge, but just astronomical. And those pockets, I think we probably just had some significant house sales, like large houses that just threw that number off. So then this month is a better probably gauge, and we are at medium sales price is down 12.49%.
Wow. That is insane.
That's crazy.
That is insane.
So we've hit a huge swing.
Yeah.
And I would say even more so in this market just because of the nature of you could have a six. I mean, we talked about last podcast. I think Feinenbaum bought an estate that was like $6 million, $5 million, something like that. I mean, that's going to
move the number.
That's going to shift the needle for that month.
For sure. So you got to take that in consideration.
Yeah. You know? So, but the -12 is significant. So if I see that 2 or 3 months, that would be really crazy to see Mountain Brook, Vestavia, and Homewood being negative. Yeah. That would be crazy. Yeah. But we're negative right now, so it's good to know. And then average days on market went from 35 to 44, and the medium now is 4 to 4. So that's an interesting. I usually go to medium as the gauge. Average is kind of hard to say, but it's definitely increased on the average. So let's push into Hoover and Trussville. Listings is up 6.43%, and sold is down 17.24%.
We're seeing a trend.
We're seeing
the trend.
We're seeing the trend. And Hoover...
It's not us great agents.
No.
It's the market.
It's the market. The market's telling us right now there's a pullback.
Right.
And I think
you have to let
some hesitancy and some rates.
You have to let your clients know that too.
Yep.
We don't control this. The market controls it.
Yes, 100%. Medium sales price, though, is up 11.92%. So that is actually very different than I would expect.
For the medium sales price to be up, and we're
be positive.
Yeah, for sure.
But you know, like I said, you can just track with it.
Yeah.
And then average medium days on market went from 7 to 10. So, and why I like that a little bit better, it does not take into account for the ones that are sitting long term.
Yeah.
But it also it kind of does the stuff that's like gets on market is really, really good and gets on. So I think you're probably, the other one is 28 to 40, and I think somewhere in the middle is probably what you should expect, unless you're really bringing a very premium product to the table.
It takes a little more time.
And also, too, like you said, you had a listing in 800K range.
Yeah. I mean,
that's a unique buyer.
The buyer pool is smaller, very small. So I mean, you have to.
Not everyone can afford it like me and you.
Yeah. Right. Exactly. Yeah. You know, if you think about the interest rates and the payments on that, I mean, it's pretty expensive. So I mean, it's gonna sit.
It's gonna sit for a little bit. Yeah. Your buyer pool's smaller. All right. So let's push over to. Push over to Pelham Helena Alabaster. That little pocket.
It's a great area too.
Great area, very popular. A lot of new builds go on up there. So
mainly new construction.
We're up on listings 10.92%. So it's a surplus, and then sold is negative 10.31%. So a continued trend of where we're at.
We got the inventory. We just can't get it sold.
We got the inventory. Can't get it sold. Medium sales price is up 13.33%. So sometimes this market will do that, and I think some of that's because all the surplus of new homes going on market.
Sure, yeah.
And those prices
go up.
Yeah, when you have we'll say 20 brand new houses, that
are in a good price range, it's gonna make the average go up.
Go
for sure.
So that's a harder one to gauge in my opinion.
100%. Yeah.
And then
especially in those areas.
Yeah, 100%. And then medium days on market is from 16 to 30, so that's a huge jump, almost double.
Yeah.
So pretty congruent with what we're seeing there. And then Adamsville, Centerpoint, Roebuck, Graysville, so kind of those pockets.
Yeah.
We're seeing 37.04 listings in the surplus.
Wow.
Yeah. So there's going to be a lot of surplus there. Solds is not as bad. It's negative 7.69%.
Yeah, but also think about price point in that in those areas as well. You know, price point a little bit lower.
Yeah, it's kind of first time home buyer
area. Yeah, so we're seeing those move a little bit faster.
Yes.
I think.
Okay. Yeah. I see what you're saying.
Yeah, because of the price point.
Yeah. It's a little more attainable.
Yeah, it is,
and a bigger buyer pool.
It is. It's a way bigger buyer pool right now.
But a surplus of listings. So let's go to. You know what? List to sales price. Interesting. List to sales price is positive in that market by like 1%, 1.38%.
Well, I think they got the idea.
But here's an interesting thing. So it's deceiving. List to sales price is not in these areas 95% of list to sales last year. And we're at just 96.6% this year. So we're still below that 97%. 100%. So, yeah. And then medium days on market from 39 to 58. So almost two months.
Yeah.
That's crazy.
Yeah.
And I will say, from a trend standpoint, Adams, this pocket, we keep looking at these areas. It continues to be not as strong. It has not been strong for the last 6 months.
Sure.
So yeah. I'm not saying overall like stay away or like it's bad. These are bad areas. It's just product has not been moving.
It hasn't. Fast. I have one listed in Roebuck now. We've now done 2 price reductions because it's an investor. And he's like, hey man, I just want to get out of it.
Yeah, yeah.
But what I'm seeing in the area, I'm speaking with other agents that are listed in the area. They've been on the market 101 days now. I'm at 55 days. Yeah. So I'm like, hey man. He just got on the contract. One of them, Taylor Jackson, nice guy. He was like, man, this area, it's a waiting game.
Yeah, yeah.
You know, and the biggest thing for him was, you know, I think they're going to get close to list if they're not on a contract, close to list price. And the reason it got back up is because they needed closing costs. So when we talk about those numbers, you know, list versus sold, we're getting back up to list price because we're adding in those closing costs.
Yeah, yeah.
So that could be, you know, a great deal of how we're getting back up to list price. But
and I think with the new NAR rules, you have to even assess, like when I pull comps, and this is a good reminder, I need to have my guy change how because he needs to pull in the commissions too.
Yeah,
that were paid out. Because sometimes commissions are happening, sometimes they're not now, and those started to become part of the negotiation just as much as concessions.
Sure.
But we always, when I have comps pulled, I always have that as a second line of how much was conceded, because that's your actual like net
number. Exactly. You know, when we're talking about these numbers, we're not taking into consideration concessions and commissions and things of that nature. So I mean, easily, you know, he's like, we got back up to close to list price, but we gave away the house. You know, we gave away 10 to 15,000 in closing costs. You know,
that's such good insight. Because these numbers are not 100%
100%. They're not reflected on that. So it shows the list to sold, you know, not down as much, right?
But you and I both know we're having a lot of conversations where closing costs are almost standard now.
They are.
Especially in
I would like to say this is essentially a buyer's market, you know? I hate to say that, but I mean, right now they have a lot of opportunity because it's a lot of listings. Yes. You know, it's not as much as a rush as it was last year, you know?
So then when you're looking at this list to sales price across the board, you could almost say that everything is probably, on average, has a $3,000 to $5,000 negative, even from that price.
100%.
That's really good insight.
Yeah, when you think about it from that standpoint, because right now
we're even lower than we
exactly.
Sorry to cut you off.
No, you're good, but I mean that's I mean, when I thought about that area, you know, in most cases we're offering some type of concessions or it qualifies for 100% financing or things of that nature. So we're offering those things up front.
And that to say, like going back to my property that I'm selling, the concession's $8,000.
Right.
I mean, I initially didn't want to do it because I was
of course, he's like, no way.
5 maybe,
like 8.
Yeah. But I'm like, okay.
Yeah, you're like, cool, great. That was all along. That's what I wanted, you know.
And all that to say is like it'll still end up being okay, you know.
Yeah.
But that was 8 initially. I was kind of like shocked by it, like that little sticker shock. I was like, I don't want to concede that much.
Yeah. Especially in the first weekend.
You know, but then someone who pulls a comp, if they don't look at that concessions, they're going to be like, oh, the market's ripping.
Yeah.
We're at 230. And it's like, no, it's tapering down. And so you really have to gauge. You really have to, like I said, I called agents.
You have to call agents. If you're not calling agents, you're going to mess up.
You're not doing your job.
Yeah, you're not. You know, you have to do your homework. You know, you have to come in prepared. And this is one of those seasons where if you're not prepared, you won't win.
Yeah.
You know, right now, the market is all about mindset.
Yeah.
Okay.
I like it.
You control what happens at this point. You have to know everything about the market right now. It's not just list a house and it gets sold anymore. Yeah. We're past that.
Yeah.
Okay. We're going back to a normalized market. And if you're not doing the necessary things, the marketing, you know, even as far as setting expectations for your client,
yeah,
they will fire you.
Yeah.
Hey, I thought my house would be sold in 14 days. Well, if you didn't set those expectations up front,
correct,
you deserve to be fired.
Yeah, exactly.
Right? So any agents out there, make sure you're doing your homework, you know, or I'm going to call them after they expire.
No, I mean, I think that's good. And I like what you said in the sense that you said we are in a normalized market.
Yeah.
And it really, truly is like we, you know, when you have rates that are 3%,
right,
it is a
absolute
market.
It was a great time to be alive. Let me just say that. You know, I told people, you wish you would have bought back then. Now you're sitting on the sidelines like renting, and you're like, man, I want to jump in, but I don't know. Well, you better jump in, right?
Yeah, it's
at
hard
some
to
point.
time the market.
Yeah,
honestly.
you know,
because I mean, there's in the '80s, there's times when rates were 15%,
right,
you know,
15%. But you know, the houses were a little bit less. Everybody says that. I understand, but money was different then too.
Yeah,
I mean, $80,000 back then versus $80,000 now. I mean, people thought they were rich buying an $80,000 house back then. You know, so you got to think about that as well. That was, I don't know what that would equate to now, but I'm sure more than that. You know, twice or three times.
Depends on the area.
Yeah, depends on the area. You know what I'm saying? But
yeah,
man, it's just crazy how things have changed, and you know how people are really have a scarcity mindset right now, just because how things are moving so slow. You know.
Well, and I think it goes back to, and we've seen it in this market.
Yeah.
There's been a lot of agents who have fallen away because of lack of being prepared. But I think great agents like you, you know, like myself, we know a lot of the agents. We do deals with them every day.
100%.
Are sticking around and they're doing good work. And actually, I feel like doing more work because we're differentiating ourselves from the competition.
You have to.
Bringing those extra skill sets, researching the market, knowing what stuff is going to sell for, and expectation setting. Mm-hmm. And so, you know, everything's cyclical. Markets are going to always be moving. We'll stay on top of this. But I do think, let's just theorize, because I like to always bring it back a little bit.
Sure.
You know, I think Birmingham overall is strong. I think that the market nationwide, probably if we were to look at numbers across nation, they are probably similar. Mm-hmm. But I think that we're coming into a unique environment where with this 10-year note, everything that's happening economy-wise, the 10-year note is moving to potentially lower rates. Potentially.
Yeah, we hope. We hope.
And we're also moving into a better season, summer and spring and summer.
Yeah.
And so I think that we're going to climb out of these numbers probably mid-April, and we'll get back to what is a normalized market.
Right.
Maybe not selling
in 14 days, but maybe
also not 100 days.
100 days, right? You know, or 30 days maybe. You know, but I agree. I think by April, mid-April, you know, school, we kind of starting to getting out, and people want to make changes then for the summer. Yeah. You know, like as I got the one in Trussville with the pool. I'm like, hey,
you got a pool if anybody wants.
You know, if you want a pool and summer is rolling around, just give me a call. But
it's gonna fly.
Yeah, man. It's gonna change. I mean, like I said, it's all about mindset, man. I can't stress it enough. I think, you know, in real estate, no matter if you're an investor, agent, lender, it's all about your mindset. Yeah. So if you continue on the path of I can do this, or knowing your numbers and knowing what the market is doing, knowing it's not you, and just continue to control what you can actually control, you'll be fine.
It's going to be good.
Yeah.
Let's talk about rates real quick, and then
we'll
wrap up.
No.
Oh, no. So January 30th, so we'll just call it basically the first, was 6.95% average, you know, on the 30-year. Mm-hmm. And at the end of February, we were 6.76. So quarter drop. So, and it is continuing to trend down in this month. So we're not seeing huge drops. I don't think we will, nor should we. You know, it's funny. Sometimes people, it's funny because like people are like, I want rates to drop like 2 points. And I'm like, you do not want that.
You do not want that.
Because something's seriously wrong with
the something is seriously wrong. Like 100% you don't want that. You know, we see what
that's called a crash.
Exactly. You think you want it, you ain't gonna be able to buy nothing. Everybody's gonna be in the market. It's gonna flood again. You know, so I like the slow trend down versus it just immediately dropping. You know,
and it will.
It give us time to breathe too.
It would, and you know, I come back to just, you know, we as a nation and people in general are very, very short-sighted. It's 100%. Just human nature.
Yeah.
And I think, and I'm going to get a little political here.
Oh, no.
We're going to talk about it. So tariffs, let's talk about it.
Let's talk about it.
Immediately, I'm not saying I agree or disagree with them. I'm not going to get that political whether I agree or disagree.
Right.
But a tariff immediately will affect the buyers right away.
100%.
And there's going to be pain. No one likes pain. Long term, though, theoretically, tariffs should bring some equalization in the market. Because what happens is when you tariff something, it becomes too expensive for the buyer, so the buyer stops buying.
Sure.
And then the supplier says, wait, we sold 29 widgets this month, and last year we sold 100.
Right.
Something's wrong.
Right. Yeah.
The tariffs are part of it, but we also have to give a little.
Yeah.
And then it's just, I've seen a lot of posts about it, and even with rates and different things, it's just like the one piece of wisdom I'd say is like so many times we want immediate economic change when it's such a complex system and things are so intertwined that we make these jerk knee reactions, especially coming from as an investor myself.
Sure. Yeah.
And you do some investing.
Yeah.
Like you have to just slow down and just say like, I'm going to wait. I'm going to let this kind of work itself out instead of just being like, oh, the market's horrible.
Yeah.
It's like, yeah, right now it's not looking as good.
Right.
But maybe in 2 years, some of the equalization of these tariffs will kind of work themselves out. Yeah, we may not, the price of wood from Canada may not be exactly where we want it.
Right.
But I guarantee you it's not going to be as expensive as it was today with some kind of equalization of the supply and demand.
No, I agree.
And so it's just with whether you're personally buying a personal home or you are an investor and you're buying or selling investment properties, we can look at it so sometimes in such a micro, and it's really such a bigger picture and a bigger play. So just thoughts.
No, for it. No, dude, I completely understand that. I mean, it makes sense.
Like, tariffs the worst.
Yeah, it makes sense.
The market's down right now.
Yeah.
The new presidency's horrible.
But it's all about mindset, man.
It's literally
I know I keep going back to mindset, but every time I think about something, I'm like, it's all how you think about it. Like have you stopped investing?
No.
Has any other investor stopped investing?
Some have.
Some have, right? But some of the ones that have been doing it for a long time and know they've been through these waves and really good with their numbers, they know you just have to adjust.
Yeah.
It's always a good time to buy, right?
Well, and the flip side is so everybody's kind of running away, right?
Everybody's kind of running away.
So what is the opportunity? And there's going to be a small percentage, not every house.
100%.
But there's probably 10% of the houses that are sitting that would take an offer significantly lower than what is listed for.
Exactly. I had one I got one listed in Centerpoint. It's listed at $2. Now we made a price reduction at $265.
Yeah.
Got an offer in at $230, and we've only been on the market 30 days.
Yeah.
Investor. So listen.
And they'll probably be here in 2 months, and
they may take it, right?
Yeah.
So it's just, do you see the glass half empty?
Yeah.
Or do you see the glass half full?
Yep.
Honestly, if you're an investor, you may have to switch your strategy.
Exactly.
Right?
Yeah.
But numbers are numbers. If the numbers work, you invest.
Yeah.
Right.
Exactly.
You just have to take into account my listing may sit 3 months more, so that may cost me a little more. So I have to add that into the numbers on the front end of the deal. You have to know these things.
Yeah.
And if you're not properly doing your homework as an investor, then you will not be successful. You'll stop investing. Right.
Right.
But the guys that are doing it at a high level, they know what's going on right now. They're in the market. Right? They know if I buy a house, it may not sell next month. You got some investors like, man, I'm gonna get this house, I'm gonna flip it, and in about a month or two, I'm gonna be good to go. I have my money back and do it all over again. No, sir.
Yeah.
Things may come up, and you have to be prepared for that mentally too.
Yeah.
People forget that part. You're thinking about all the numbers, but you have to mentally be prepared for the worst to happen. Yeah. And I think people, sometimes they don't have that, man.
It's true.
Honestly.
It's true. That's such good advice, man.
Yeah.
Well, I love this because there was a lot of good insight, a lot of Birmingham-specific knowledge, a lot of things happening, a lot of shifting. It'll be really interesting to see what March looks like.
Yeah.
And, you know, I am excited. I'm very optimistic, but right now, we're all telling our clients, hey, it's not as hopping, but we're still going to get this.
Yeah,
sold.
We're still here. We're nice and tight, baby.
Well, I love it, man. Thank you so much for your time.
Man, I thank you for having me.
This
for
was
sure.
great, man.
Oh, it's awesome, man. Thank you.
Catch you soon.
Yes, sir. All right.